Every time Bitcoin falls, the news starts screaming the same thing. Bitcoin has collapsed. Its end is near. But think about it. What if this is not a collapse, but a chance for smart investors? There was a crash in 2018. In 2022, another collapse. Every time we saw the same headlines about the cryptocurrency crash. But what happened next? In March 2024, Bitcoin hit a new high. And in January 2025, its price surpassed $109,000 for the first time. And as you watch this video, Bitcoin may have already set a new record. Why does an asset that has been buried so many times continue to rise? The answer lies in the fact that dips are not an exception for Bitcoin, but part of the normal market cycle. In case you are now doubting Bitcoin's future, ask yourself this. If it's returning to growth every time, perhaps it's not about the cryptocurrency, but about the way the market as a whole works. When we talk about Bitcoin dips, it's important to understand one thing. This is not a unique phenomenon. This has happened before in the market of assets that have become the backbone of the global economy. Think of the stock market. In 2008, the S&P 500 index collapsed by 50%. At the time, it looked like the stock market would never recover, but those who didn't panic made tons of money on the subsequent rise. Gold is another example. In 2011, its price was at its peak and then collapsed by 30%. Many rushed to sell on the fall, confident that the price would not return to previous levels. But what happened in the end? Gold recovered and hit a new high. Now look at Bitcoin. It fell by 85% in 2018, but a few years later, its price rose 20 times. In 2022, the market collapsed again by 75%. And even then, it was clear. For those who understand market cycles, this is not a signal of panic, but an opportunity. Why is this happening? Because strong assets, be it stocks, gold, or Bitcoin, inevitably experience declines. However, their fundamental value allows them to not only recover, but to become even stronger. The smartest investors don't panic at times like these. They see a chance. Why does Bitcoin not just recover from collapses, but come out of them even stronger? To understand this, we need to look at its fundamentals and the events that have gradually shaped its status as a serious financial asset. Bitcoin is programmed to become an increasingly scarce asset over time. One of the key mechanisms that facilitates this is called halving. This event occurs every 4 years and consists of halving the reward to miners for a mined block. When Bitcoin first emerged, this reward was 50 BTC. Then after the first halving, the reward decreased to 25 BTC, then to 12.5 BTC, and currently miners only receive 6.25 BTC per block. This process creates an artificial scarcity. New Bitcoins appear more and more slowly, which means their supply on the market is decreasing. Historically, every halving has been accompanied by an increase in price, as decreasing supply invariably faces increasing demand. This mechanism is built into the Bitcoin system itself, and it is what makes it an asset that becomes more valuable over time. But halving isn't the only cause of scarcity. According to analytics company Chainalysis, between 2.78 million and 3.79 million BTC are permanently lost. That's roughly 17% to 23% of the total coins. These Bitcoins remain in forgotten wallets, on lost hard drives, or locked because their owners have not left access to their assets. These coins have fallen out of circulation, and there is no way to get them back. But Bitcoin has become scarce not only because of the losses. More and more big players are considering it as a strategic asset. Previously, cryptocurrency was perceived as an experiment for IT workers. But now everything is different. Tesla, BlackRock, ARK Invest, and other investment giants have invested hundreds of millions of dollars in Bitcoin. And their goal is not quick speculation, but long-term capital protection. The next step, which made Bitcoin a full-fledged financial instrument, is the approval of a spot ETF on Bitcoin in the U.S. in 2024. This instrument has changed the rules of the game dramatically. An ETF, Exchange Traded Fund, is an exchange-traded fund that allows you to invest in an asset without having to own it directly. It's like gold. Instead of buying a bar and thinking about storing it, you simply buy shares in a gold ETF, and your capital is still tied to the price of gold. Now it works the same way with Bitcoin. Before, its purchase required registering with a crypto exchange, setting up wallets, and worrying about security. The spot ETF has removed those complications. Now, Bitcoin can be bought literally in a couple of clicks through a familiar brokerage application. The Bitcoin spot ETF didn't just make it easier to buy, It was an important step in attracting capital to the market. Big players have long been accumulating Bitcoin through over-the-counter trades. But that wasn't enough for exponential growth. The real acceleration begins when not only large investors enter the market, but also small institutional players, small fund managers and private investors with serious capital. It is they who massively increase demand, creating an effect that has repeatedly become a catalyst for growth in stock markets in the past. Now, this process has been set in motion in the Bitcoin market as well. ETFs have removed the barriers that prevented many investors from entering the crypto market: complex storage, security concerns, and regulation. When these barriers disappeared, capital that had long remained off the sidelines began to actively enter Bitcoin. This flow of fresh capital didn't just enhance liquidity, it became an important factor that set the stage for long-term growth. Another factor that increased Bitcoin's deficit emerged in March 2025. At that time, the U.S. announced the creation of a strategic Bitcoin reserve. This move actually put Bitcoin on par with gold as an element of national security. And if one country starts accumulating strategic reserves, others will inevitably follow their example. The more coins accumulate in the reserves of states and large funds, the less Bitcoins will remain in free circulation. That's why Bitcoin doesn't just recover from falls. It comes back even stronger. The halving mechanism, lost coins, investments by big players, and growing shortages create the conditions under which the Bitcoin price inevitably tends to rise. Although Bitcoin is increasingly being called a safe asset, investors still have doubts, and that's normal. Any asset, especially one with a history of sharp ups and downs, raises concerns. The most common fear is a market crash. Investors worry that Bitcoin could lose value dramatically, as it happened before. But it's important to remember that strong assets go through such periods. Whether it's the stock market, gold, or real estate, dips are inevitable, but long-term growth comes to those who stay calm and stick to a strategy. Another fear is that Bitcoin is a relatively new technology. But today it is already backed by major companies, investment funds, and even governments. The market infrastructure is getting stronger and its participants are becoming more and more professional. Therefore, a reasonable approach is not to panic, but to build a long-term strategy. For example, the DCA strategy, buying on a regular basis, allows to smooth market fluctuations and avoid emotional decisions. And capital allocation between different assets helps to survive even strong drawdowns without serious losses. Understanding these principles allows you to look at risks not as a threat, but as a natural part of the investment process. Take MicroStrategy Company. In 2020, when Bitcoin was worth around $10,000, they began aggressively accumulating coins. At the time, many questioned their decision. Today, their investments are valued in the billions of dollars. Major funds such as BlackRock are doing the same. They don't try to catch the bottom or guess the perfect moment to enter. They buy on drawdowns, knowing that the market will eventually recover. That's why collapses only scare those who look at the market short-term. Those who think strategically see the dips as an opportunity to take a profitable position until the next rise. But Bitcoin is a separate story. Its status as the first cryptocurrency has long been established. No one is seriously trying to move it from this place. Meanwhile, the fight for the second place is much more interesting. This is where the toughest competition is going on. Ethereum has held this position for many years, but many projects tried to push it out of the market. Some claim that they could work faster, others promised lower commissions, and others built their own ecosystems hoping to lure users. And yet Ethereum remains in the lead. Why? What allows it to maintain this position despite constant pressure from competitors? This question is important not only for those who are interested in Ethereum, but also for everyone who wants to understand what technologies can determine the future of the crypto market. If you want to know the answer, subscribe to the channel, and in the next video, I will tell you why the Ethereum killers never managed to displace it. What do you think about Bitcoin? Do you see the falls as a chance or a threat? Write in the comments. Let's discuss it.